Okay, good morning and welcome to the Minervini Private Access Training Room. I'm Bob Weissman. If you can raise your hand to let me know that you're hearing me loud and clear. Excuse me, I'll be clearing my throat throughout the session, recovering from something this weekend. That looks all good. And let's also welcome Mark Ritchie into the room. Good morning, Mark.
Morning, Bob. Morning, Mark. Morning, everybody.
Okay,
Morning.
if you could raise your hand real quick just to let us know you're hearing Mark Ritchie loud and clear. That looks great. And let's get started with today's session with Mark Minervini. Good morning, Mark.
Okay, good morning, everyone. I hope everyone had a great weekend. Real quick, as you know, I put a little post out there this morning talking about the potential for reversals and being careful here. We're not out of the woods whatsoever. We definitely want to give the market at least to the mid part of this week, see how we trade on the heels of that poor close at the end of the week last week. Hold on, I just got to click something here. There we go. And again, of course, RXST was a perfect example of exactly what I was talking about. Here's a stock that's coming out of a really nice base, but when the market's in a corrective phase and you're getting to a volatile phase, I must have caught what you have, Bob. I'm clearing my throat too. We're going to see that those reversals, the squats, and then this is how we judge the market based on the the current action, and then whether we get pivot failures or worse, base failures, and then that tells us about the level of supply that's in the market and the difficulty that we're going to face, and then from there we look forward to see how those recover themselves, and whether new setups develop. So the recoveries and the resets. So at this point, we don't see a tremendous amount of damage, but there are a lot of stocks right now that are just starting to leak off in the pivots, like something like an RXT now will be added to that list where you get that outside day. You've now you widen the volatility, and this is where we need to watch carefully and see if there's a proliferation of where we fall apart here and we start breaking apart a lot of these pivot points in bases that are setting up. And then if we get base failures, that would give us a look into maybe a longer, bigger correction or a longer time that it would take to get reset. So basically, the amount of damage, you got to look at it as like an injury. If you sprain your ankle, you're back up running around maybe in a couple weeks. But if you break your leg, it's going to take months. Same thing with the market here. The indexes, the Dow, of course, we got this one right as far as the index to being, as far as the major index is short. If you look at the S&P still sitting right on that 50-day. I'm expecting this to undercut the 50-day and to come in here. The IWM, of course, has been weaker and is actually moving to a new low here. And NASDAQ has been holding up pretty good too. But once again, we're going to watch carefully. Microsoft's holding up here. Netflix is holding up. You got Meta holding up. So these stocks here, if they start giving way, that's probably where, the proverbial towel is getting thrown in at this point. If it can hold up and they break out, then, probably, be something that we'd be looking at potentially buying. Let's see. I guess that's about it. I did a pretty extensive look at the market on the weekend. And so maybe you want to, if you haven't watched the weekend study session, you might want to do that. So let's get to your questions and see what you guys are thinking here.
All right, Mark, if you see the first question, Konstantin is asked, providing a lot of statistics. Just started trading in January this year. Average win of about 5%, average loss 2.5%. Winning trades he's holding for 13 days versus 3 on the losers on average. And his batting average is about 31%. And he had a early start to the year up 8.5%, but has slowly been giving it all back now that he's stepped up his size and the market's become more challenging. So his question is, he thinks he was slow to scalp his position size beginning of the year. Would love your comments on his performance and anything to see he might be missing.
Yeah, I mean, obviously you're maintaining the risk-reward relationship, and that's the first step, is to make sure that you maintain that positive reward to risk ratio 2-to-1 you have there, holding the gainers for a lot longer than the losses, cutting the losses out very quickly. 31% batting average might mean that you need to be more selective because the market has been pretty good, actually. I think 31% is a little low here. And if you've given back all of your gain, then you need to do a better job maybe at backstopping and protecting what you have there. But looks like you're doing mostly everything right without really looking in depth and seeing the individual trades. I can't give you much more color than that, but the 31% batting average, I think, is a little abnormal in this environment. So maybe you need to be a bit more selective.
Okay. Sharuk was asking a question to Mark Ritchie. I'm not sure why only Mark Ritchie, but is there a minimum number of weeks you want a stock to consolidate before you consider a low cheat entry? For example, 5 weeks. And then he's got a follow-up question.
Well, it depends on the setup, is what I would say. So something like a power play, you can play a low cheat in just a few weeks. But normal base, yeah, I mean, it's that in between I've referred to saying, some of these low cheats, I don't like them when the bases are really short and they're not the power plays. Otherwise, yeah, I would prefer the larger bases.
Good. And he also bought NMM, Mark.
NMM.
Right. On the pullback on April 3rd, he's wondering, he got stopped out at 41.30, if that was buying it too soon.
I think it's a little too soon. Yeah. Let me just take a look here. I'm curious where we are in the big picture here. Yeah. So I think it's a bit too soon. And see, now that you've undercut this low here, you've created this little shakeout, and then you come back here, this is really starting to look more appetizing, if you will. And now if the market were to get in trouble here, let's just say we correct here, come off today, this week, a few days, we're under pressure, and this could hold up real tight. And let's just say this comes out in a really, in a weak environment. This might be something you want to buy here. So I'd watch it, see if it can hold up, if it can stay tight here. Now that you've gotten that shakeout, you really need to go pretty soon here. If this gets too long, then it's getting abnormal. But over here, it was a bit short. And the real problem is you experience some volatility. See, it leaked off here. And I see you were looking for that sort of, reversal and go. And that might happen, so I don't think it's a bad play. But, in hindsight, we can see, okay, it didn't go. If it just took right off, we'd be saying, oh, well, that's a great call. So, but you can't let the result justify the means, right? So, I mean, to be perfect, this would need to tighten up. And it did. You see, it went for a couple days, but then it leaked off here. And that's with this weak environment. But now it comes back here and it's staying tight. The volume's coming down. So it's acting really well in a weak market. So I still think it's something that I'm going to look at this. I don't know if I think we had this on in a previous week maybe, but I'm not sure why this isn't on our focus list. So I got to take a look and see. I'm going to take a peek at this. This might be
Yeah, it
put
was
on
last
focus
on
list.
focus list 2022.
Okay.
Question coming from Bader. During the last few weeks, I start to see many bank stocks forming proper basis. As the time passes, the bases get better and better. My question is there any chance that the Fed surprise everyone and raises rates?
I think there's a chance of anything, but right now that's not that's not something that's probable. I would say it's probably a 0% probability in the near future. But that doesn't mean that the banks or whatever industries and indexes and so forth aren't discounting something further out. I don't know, but the news generally intersects with price. So you'll find that price will do something, and the news, you're getting toppy in the market, and then all of a sudden the news comes out. It's almost like the market has a crystal ball. But I can't say where direction of interest rates are going other than thinking probabilist, thinking of probabilities. And right now with the data that we had, they're certainly not going to lower rates. There's no way. Raising rates, definitely not. But if we had another quarter or two and inflation increased above estimates, I think you'd be hearing that right away. They're going to start talking about that. You're going to hear analysts talk about potential interest rate hikes, and that would definitely hurt the market.
Yep. All right. Question from Eric is asking, how do you balance between going in for breakouts versus stem model being red? Most probably get a nice rant from Mark, but I'm here long enough to say I'm not looking for a set or a stone answer. I'm more looking for the chain of thought process compared to actually asking how often and how long should you keep trying if you decide to sit out.
I'm not sure I completely understand. So saying while it's red, while we're on a stem model red of trading breakouts during that period.
Yeah, how do you balance the two? One being a reflection of stocks in the red reading as a whole, and then stocks setting up and breaking out.
So the stem model is a hindsight, is a rear view mirror of what's going on. So by the time the stem model's read, I've already been paring back, and I'm not waiting for the stem model because the stem model is part of my trading. My own personal experiences in the market are part of the stem model. So what I'm experiencing in my own trading, what we're experiencing in the open positions, and what we're experiencing on the focus list, and what Mark and Brandon are experiencing personally, and their own analysis is all part of the stem model. So, trading while the stem model is red, we're most likely not going to be doing except in maybe small fashion. Now, again, if all of a sudden a bunch of stocks are setting up while we're on red, that's going to shift it to orange or green, and that has to happen first. So we first have to have some improvement. Will we take part in that improvement? Yes, yes, we most likely will. Maybe not right away though. Like for here, RXST is a perfect example. If the market was acting better and stocks were acting better, I would probably be buying this, this morning, almost certainly. As a matter of fact, Mark sent me a message and asked if we even wanted to put it, on alert some of these stocks, like an AMAT today was starting to move here, and I said let's go easy on putting anything out, especially for buys, and even pointing out breakout alerts at this point because we're not seeing what we need to see. It's just a very tip of the iceberg. But let's just say we start seeing some stocks break out, and then a few more set up, and that starts to proliferate. I'm probably going to take a couple positions, smaller, and we're going to start easing back in. And then from there, if that works, then the model will shift. So and then I'll get more aggressive. And so they kind of happen together. But your question of how maybe I think this is your question of how much you should be trying while you're red and things aren't working, Mark, and I'll let you chime in on this too. I mean, we're going to be very small. Like right now, we're going to go in small. We'll try a few positions. If they work, then we would move it up. But if they don't, we're gonna back off. We're gonna get smaller and smaller. And even if you don't go to 100% cash, let's just say you start off with a quarter position, and then you go to an eighth of a position, a 16th of a position, you're not going to get yourself in trouble if you progressively pull back on the size and you cut the size down, you cut the size down, you cut the size down. You're going to be trading at very small levels, even if you start it with a full position. A full position to a half to a quarter. That's the key. The key is to be incremental and in both directions. When things are going well, you need to have the courage to step up a bit, but not get crazy and just jump in without evidence. But bend with the weight of the evidence. I don't know, Mark, is there anything you could add to that?
Yeah, sometimes I use that analogy of, the hitting. If you're not, if you struck out the last 4 or 5 at bats, you shorten your stroke a little. You're just trying to make contact. And a lot of it, sometimes people think the pilot positions or smaller sizes is, you will get the question, well, you're not going to make a lot of money. Well, that's not the goal. The goal is to keep a finger on the pulse and see, and to Mark's point, the model is in sync with your actual trading. So you want to actually be ahead of the stem model, and where
It'll be
you go,
part of, yeah, you're part of it. You're part of those
exactly, where
changes.
your own trading. That's
But
how you
on
know you're
red,
kind of,
right? But on red,
yeah.
we're going to take like one, maybe we want to see 1 or 2 stocks work. If 1 or 2 stocks work, maybe we move to another, couple trades. Now, if I got 3 or 4 stocks that are moving, and I last 3 or 4 trades are profitable, okay, now I'm going to step up a bit. I'm going to step a little bit, and maybe 25%. Now we go to 50. If that's working, and maybe now we got 6, 7, 8 stocks working, I'm not going to hesitate. I'm going to move very quickly, and then I'm going to get to 100% or bigger position sizes. I might even get to 100% invested, but I'm going to start being more aggressive, whatever aggressive means to you. All right. See that it's personal. So you really it's got to be part of your traction, because that really encompasses what's going on in your own trading. You can't be basing it on Mark Ritchie's trading. You got to base it on your own trading. It's very important. Your own results are your ultimate guide.
All right. Excuse me. Question on AMAT from last week. A couple of questions, actually. People asking if you could review the entry that you took on Thursday, because of the high of the pivot seemed to be higher than where you bought it. So trying to understand the entry.
Yeah, just trying to trade near the danger point, getting a jump on it as it started to move. If it broke out, great. If it didn't, the stop is so tight that, I can try it a number of times. And that was the main thing, because here we know the market is more volatile right now. There's not as many setups. We're on red. That's the weight of evidence here. So now I want to trade from the lowest risk possible. And you might think, well, buying the stock early is riskier. No, actually, it's less risk because I'm closer to the stop. So I was just trying to trade it as it's moving in the direction. And then I'm watching it very carefully. Like if it doesn't break out, if it doesn't get above there and it stalls, I probably just get right out, or I might even tighten the stop even more. So it's not like, the nice thing about it is that you're not pot committed in trading. Pot committed is you shove all your chips in the center and that's it, right? You shove them in pre-flop and now you're in there. The cards come out. You can't make a change. You're not pot committed in trading. You can pull your bet back anytime you want. That's the beautiful thing about it. So a lot of times what I'll do is I'll just trade closer to the danger point. I'll watch very carefully. If it's working in my direction, I'll either get more aggressive, add to it, or I'll pull, I'll just pull in real quick. So I like this area. I like the LCRX. We got a couple of these names. This area has come a ways. ABGO, of course. There's a lot of fundamentals there that are good beneath the surface. Technically, they're holding up pretty well. So trying to give it a little bit of the benefit of the doubt at a very low risk entry. Just that's the part of being creative. But you'll notice when I'm creative, and if you see Mark and Brandon, the way they're entering stocks, our creativity is always within a very, very tight risk framework that we're not doing anything that crazy. Usually creative means less risk, more risk adverse, and trading from a low cheat, but really trading from a very low risk entry point as far as close to the stop.
Okay, question on pullback buy if UCTT coming into today
Yeah,
was setting up as a pullback buy.
no, definitely not.
And GKOS.
GKOS. So yeah, I mean that's definitely a pullback buy. Looking at this little pullback here. And obviously, you see it's leaking off a bit too. This is exactly what you're going to be seeing a lot of, where they'll poke their heads out and then there just won't be the institutional sponsorship there. You'll get a retail breakout and it just can't sustain it. And then and very often what will happen is you break out on retail money and institutional money comes in and sells because the market's under distribution. So they use that strength for selling, and that's how you get those quick reversals. People think, oh, well, it doesn't work anymore, technicals. This stuff has been happening since 1896. Nothing has changed. Exact same dynamics are working here. The same forces. You just have to get good at identifying, and we know what's going on here. And now the key is to wait for the shift. Now, there's this fine line as the previous question. When do you start to move more aggressive? When do you put that first toe in the water and try this pullback buy? Well, sometimes, as Mark Ritchie says often, you got to let some pitches go by. You got to take some looks. And also you got to wait till you're seeing the ball. So that means that you might miss some, or you just play really small and you try this idea here. It doesn't work. Now, when you bring when you bring the size down and you tighten the stop, now that's making up for the fact that you're going to be wrong more often and you're in a more difficult period. This is something I talk about in my book. You should reread it over and over. The books that you should be reading over and over and over until you can recite them from cover to cover are my two stock market books, the mindset book, maybe Momentum Masters too, and O'Neill's books. If you can master those books, that's pretty much everything. And this is going to show in real life. And there's nothing more. There's nothing more you need to know.
All right. Question, and then the final pullback buy question is on Coinbase coming into today. Was that a pullback buy?
Let's pull it up. So no, definitely not a pullback buy. Maybe we do have a tutorial on pullback buys, right?
Yep.
I was gonna say, Mark, you can show them where the pullback buy was here on Coinbase.
Yeah, I mean, well, there's a pullback buy right here, on the 11th. Which I just realized that was my mother's birthday. I forgot about it. No, she's not alive, so I didn't forget about her birthday. But anyway, yeah, I mean, you got a pullback buy, right here. I mean, you could make a case it's a pullback buy here too, or here, but this is definitely not a pullback buy. Closing on the low here, and definitely not. I want to see it tighten up. Now, this is starting to get at risk of leaking off here too. You definitely want this to hold these lows. Now, you may shake out. You may shake out and